Hey guys, what's going on? So there's a lot going on in the market today, man. Robinhood and TD Ameritrade, I don't know what other brokers too, they basically stopped trading on all of the Wall Street Bets stocks that they've been trying to pump up. GameStop, Bed Bath & Beyond, AMC, let's see, BlackBerry. None of these you could trade on. You could trade right now. Look, GameStop, it's not supported. AMC, not supported. Look at this, BlackBerry, Bed Bath & Beyond. And there's probably a couple more. PLTR. Oh no, you could still trade PLTR. SPCE. Well, those are the top four. But man, GameStop has dropped significantly since today. It made it all the way up to like almost $500 today. Well, pre-market. Look at this. 467. Look where it's at now. 132. So I do have a position in this. Remember, I bought a put. It's worth, I paid $27 for it. It's worth $152 right now. So I'm $125 profit off of this. I'm just going to let it ride just in case it drops further. This doesn't expire till next week, next Friday. So I still have 6 trading days on this. Just going to let it ride out. I took a loss yesterday on that Iron Condor, the 15 contracts. I ended up buying that back for $600. Let's see. Yeah, so I paid $90 for that. So it wasn't exactly $600. I paid $90 for it. I sold it for, I sold it for $90. I bought it back for $600. So I lost $510. And then I lost another $100 yesterday in that call credit spread I opened to try to cut the loss of the Iron Condor. So I had to close that out because it was getting close to my short leg on that. So I lost $100 there. Then I lost $510 because it was getting close. It actually broke through at expiration, at closing, and into closing. I would have lost $1,500. So I'm glad I lost $510 instead of $1,500. So I cut that loss. Let's see what else here. I have this Amazon. This expires tomorrow. This is a credit spread. 6 contracts. I ended up trying to roll out. All right, so this is weird. So yesterday, let's go to Amazon. And this is looking pretty good. I mean, never say never, because yesterday I was saying that my SPY Iron Condor was looking pretty good, and it ended up pretty much closing out worthless if I didn't cut the loss on it. So this thing could drop, who knows? So this expires tomorrow. But I did end up, let's see. I don't know what I did. Put credit. So I ended up receiving on January 19th, 20. So I opened up a put credit on Tuesday. I received $120. Then I rolled it forward when Amazon was dropping. Not even close. It was still like $70. I was like, you know what? Let me try rolling this thing forward. So I rolled it forward for a $309 credit. But then I ended up selling it for 705, so I lost money on it. I don't know what happened. So I lost a lot of money yesterday. I probably lost close to $1,000. So then yesterday I opened up the one I'm in right now. That closes tomorrow. I opened 6 contracts, so I took a $3,000 collateral, but it paid $738. And I opened it yesterday, so over 2-3 days. It's looking pretty good. So the plan on this is to just leave it. I have 2 options. It's up now. I'm not going to sell it now. My plan is tomorrow I'm going to make a move. Either if Amazon drops under 3,200, or let's say under 3,280, I'll try to roll it forward for a credit, a small credit, but it will give me more time. Basically, you're buying time. And if it's looking good, if it stays around this price, then I'm going to turn it into an iron condor and try to get a little bit more premium off the top over the course of just tomorrow. And I'll go pretty far out. So like if I was to turn this into an iron condor right now, basically I have a put credit on. I would just buy a call credit spread. But I would go like $3,500. So I buy a call. And I could do 3 of these because I'll equal $3,000 collateral. No, I did that wrong. That's why someone puts. So buy a call. Maybe 35.10. Sell a call 3,500. And if I was to open this now, it would give me another $48. That's $250. I could probably drop this thing down. So it would be a little less conservative. Go to like 34.20. There, that'd be another. Not enough buying. Oh, it would be 3. I'd only be able to open 3 because it's a $10 wide spread. So there, it wouldn't cost me any more collateral. I'm just taking on more risk, but I'm going to possibly open this tomorrow and gain maybe not 100 because, we're going to be closer to expiration, so the premiums are going to be a lot lower. But we'll see what they're at tomorrow. I mean, anything's better than nothing. So even if I can add another $50 to my 760 and finish the week, I wouldn't even know. Maybe close to break even. Depending on what happens with the rest of this stuff. This GameStop, I mean, should I just take the profit now? How much is it up? It's up 418%. Let's see what GameStop is doing. It is curling back up a little. And time is going to start to eat at this. But if it drops down more, you know what? Let's just try locking the profit now. Let's try selling this thing now for $1. One for 140. No, the bid and ask spread is really wide. So this thing's not going to sell for $1.40. That's just the middle of the bid and ask. 40 to 240. I could probably get $100 for this. 130. Let's try locking in some profit on this thing now. 125. Yeah, I probably won't even get. I probably would have to drop it down to 100. 120. I'll go down $5 increments. Yeah. Yeah, because right in between those, well, 35 and 5, 268. Wow, it just went up. And it's fluctuating too much. Now it's 89. It's because the bid. People are trying to sell them, but no one's trying to buy them. So you know what? I'll just leave it for a little bit. Screw it. And then what else do I have? I bought a call on Rocket. $40 call. I think I told you guys yesterday. And someone wanted me to go over how to open an iron condor. It's very simple. I think I went over it a couple times. You go to stock. You go to trade. You want a call credit spread and a put credit spread combined. Just do this really quick. Buy a put. You want to buy the furthest, the outside put you buy. You sell the more expensive, right? That opens a put credit. Go to the calls. Go above the price, right? Say 387.50. That's $1 wide. So just stick with $1 wide. You buy the outside one. Sell the more expensive. That's it. Iron Condor, the price needs to stay between your two sells. So between 386 and 374. You'll get $23. This is going to cost you $100 collateral. Because it's $1 wide. Whatever's your wider spread. Say 0.21, review, $100 collateral, and that's it. It's that simple. So that's it, guys. For the week, I am up 660 today, but I am down for the week, 360. For the month, I'm still up in 3 months and, you know, so on and so forth. So overall, I'm still pretty far up. Like, still over 100% up. So the $600 loss, it hurts, especially for the weeks. It's my first big loss, but you know what? It is what it is, and there's always next week. Hopefully these... I mean, I could probably sell this thing right now, but I'm just going to wait. Amazon's looking really bullish, so I'm just going to hold off. But that's it. GME's going back up. All right, I'll update you guys tomorrow. So that's going to be it for the video. Hope no one got screwed out of that GME stock. And hopefully if you're holding calls, you got out. Or if you're holding stock, you got out at 500. All right. See you guys.